Hey everyone, welcome back to Thoughts on Investing. Today we're breaking down the most important stock market stories from the week of March 30th to April 5th, 2026. Before we dive into the data, a quick reminder. Investing involves risk, and this video is strictly for educational purposes, not financial advice. After weeks of extreme chaotic swings, global stock markets have hit a sudden cooling off phase. Over the past week, the Dow Jones Index has moved entirely sideways, posting only tiny, incremental gains and losses. And if we add the S&P 500 and the Nasdaq to the graph, you see the exact same flat-lined behavior. This stagnation represents a state of paralysis. Investors are currently holding their positions, waiting for a clear signal from the next major global event before committing any new capital. The primary catalyst keeping everyone frozen right now is the ongoing conflict in the Middle East. These geopolitical tensions are causing severe physical disruptions to regional supply lines and critical shipping routes. As a result, crude oil prices are swinging violently, bouncing up and down between the $90 and $100 per barrel range. The market is so sensitive to this region that even minor updates regarding a shipping lane or a conflict zone trigger immediate, sharp price swings. Until businesses can reliably predict what it will cost to fuel their operations, they cannot confidently plan their budgets. That uncertainty keeps the entire market nervous. That high cost of oil acts as a wedge, splitting the stock market into distinct groups of winners and losers. The clear winners are the energy producers. Companies pulling oil out of the ground or refining it are generating massive profits right now, heavily outperforming the broader market. Investors are pouring cash into these energy stocks as an inflation hedge, buying assets that tend to rise in value as the general cost of living goes up, protecting their portfolios from inflation. But on the opposite side of that trade, the airline and travel industries are taking a severe hit. Airlines are facing a brutal combination. The direct cost to fuel their planes is skyrocketing, while global tensions are actively discouraging consumers from booking flights in the first place. Right now, an investor's success depends almost entirely on whether they own the companies selling the fuel or the companies forced to buy it. Those high fuel costs don't stay contained. They eventually bleed into the price of transporting physical goods, triggering widespread fears of sustained inflation. If inflation stays high, the central bank faces a serious problem. They will be forced to delay any planned cuts to interest rates. When interest rates stay elevated, borrowing money remains expensive. That restricts corporate expansion, makes debt pricier, and puts a tight lid on broader economic growth. But we did see a few positive signals break through the anxiety. President Donald Trump suggested that diplomatic talks with Iran could happen soon, a headline that temporarily eased some of the market's panic. Meanwhile, the technology and AI sectors are showing signs of organic recovery. Buyers are looking past the immediate chaos and returning to these companies for long-term growth. So we are left with a market completely frozen in a tug-of-war. On one side, the heavy macroeconomic threat of sustained inflation. On the other, the hopeful possibility of political diplomacy. With the market so sharply divided, where are investors actually moving their cash while they wait? The answer is the US dollar. The dollar is holding incredibly strong as investors seek a safe haven, a stable asset to park their wealth during times of heavy global uncertainty. While a highly valued dollar can put negative pressure on global commodities and international trade, it clearly proves that Wall Street is currently prioritizing safety over risk. The defining strategy for the week is pure caution. No one wants to make an aggressive move until they see a definitive tiebreaker in the data. Until those proposed diplomatic talks definitively bring down the price of oil, or inflation data forces the central bank to adjust rates, cash and caution will remain king. That wraps up our market breakdown for the week. Do you think stocks will recover their momentum next week, or are we in for a drop? Let me know down in the comments. And if you found this helpful, hit the like button and subscribe for our weekly updates. See you next time.